And good afternoon. This is the Elliott Wave Daily Update for the S&P 500 being recorded on Wednesday, September the 10th at 1:50 p.m. Pacific Daylight Time. I kind of want to start today by sharing that I really do understand the frustration that as traders we all are feeling when the market seems to be doing one pattern, flips, changes its mind, goes in a different direction, and then again flips, changes its mind, and goes back in the other direction. It is extremely confusing. It is, in a very strange way, to say the least, it is following Elliott, but not necessarily conventionally as we would expect. And as I've pointed out previously, some of the differences that I've seen in Elliott are within the patterns themselves, particularly one that I think we're going through right now that I've continually to show, and that's when this is right here. And it would be within a wave two position. Not that there's anything written about that a wave two could not also contain an irregular B wave. What wave two says it cannot do is that wave two cannot exceed the starting point of wave one. And that's way down there. But it certainly can put in a new high as an irregular and then reverse back down to put in the C wave. This is something that I'm noticing much more frequently um, in our age of quantitative trading, in our age of algorithms totally being in control of trading, in our age of growth, that unprecedented growth and size in options trading, and in the different variables within options, zero DTE, Friday expirations, daily expirations, monthly expirations, quarterly expirations. It just seems that every time we turn around, we're having another expiration. And then just like here, noticing in here that this was a running fourth wave correction, which is a rare Elliott uh, pattern, but it's Elliott himself that told us about it. It's Elliott himself that wrote about it. Now, the latest challenge to it is the fact that the E wave came down below the C wave. And so I went back again and I checked. And again, I'm running AI, and AI is scouring all of R.N. Elliott's original works. Plus, I do have them. And so within that, it comes out and specifically says, no, normally in a triangle pattern, you would not expect wave E to exceed the completion point of wave C. This time it did. And Elliott allows for this and never mentioned in terms of that the market can't or the pattern would be invalidated should it occur. What he made mention of is that there are going to be times when it will be so far away from that A wave, but that as long as it, and then this would include even coming to the new low below the C wave. And what he mentioned was is that it maintained the diagonal nature of the pattern, and it did. And that every other box is checked off to what to expect from this. But to see that we get not just one, but two new highs over wave three is continually boggles my own mind. But when we're struggling to find what is this pattern, when we're struggling to find what the heck is the market really doing here, and what we do have, of course, are those rules. So I want to just make it clear that, again, Kevin, thank you for continuing the conversation because it's a fair conversation and it's a good conversation. We need to discuss, hey, are you bending the rules, Michael? Are you coming up with your own new rules? And the answer is no, but I'm going back to try to figure out what is going on in this market that has changed so dramatically from the time when Elliott wrote it. First of all, there was no futures market. And as we already know, the futures trade longer in terms of time than the cash market. That's how we get a lot of these other patterns that fit in one market, but or say in the cash market, but don't fit in the futures market necessarily. But so what do we do? And that is really the question that I leave open for our conversation. So those that I to please contribute to it. What do we do when we run into these changes that should invalidate a particular pattern? Now, well, let's get into today, which is again pretty much to exactly what we talked about. PPI comes out, market rallies, comes off a little bit, rallies harder, when we open, goes up and creates a new high. In fact, a new all-time high coming in at 65, 60, 65, 65. Now, amazing. And then turn around and spend the rest of the session coming down. Now, if I'm counting this as 1, 2, which by the way, the conversation did grow because as you know, I've said each day, if I have to put a wave 2 there, it's not going to be easy for me because I'm going to have to bring this down to the 15-minute and open it up. And you need to see. Because really, it's vertical. It's a 5 waves. It's not an ABC. And that's how I'd have to put it. So again, with today's move, I'm like, okay, I can accept that this is the A. In fact, I continue to talk about this in the morning updates and in the daily updates. And here it is again, that I was thinking, okay, great. 1, 2, I'll go with it, folks. We do have to say we have to allow for things. And again, making reference to R.N. Elliott's original works, his original writing, that when all other things have been exhausted, then the analyst needs to do, and I don't want to use the word best guess, but with the information and the Elliott that we have, we attempt to apply something in terms of what should it be, and at this count, it should be a 2. But now we're getting a little bit more clarity because you see that 1.236? It exceeded it by a tick. By a tick. So it's pretty much 1.236 times the length of wave A and to the upside. That puts it as an irregular B wave. Now we started to come down. This low that we made there at 6522.50 was exactly 1 point below the high of which would have been wave 1 on the way up at 6523.50. That was the high what I've marked as wave A. Now, if indeed the market continues to fly tomorrow, okay, and we exceed this high again, are we then reverting back to saying 1, 2, 3, 4? 4 would have definitely overlapped wave 1, but just by 1 point. So what's the limit? What do we discuss? What do we think? I'm putting it as an ABC. because I believe that the market will continue to come down. And why? Because the market has already made it clear that they're not so concerned about the PPI, as evidenced by the volatility measurement, right? Less than 10, came in at 9, and it didn't really do very much, did it? Whereas the CPI, which is expected to come in hot, I guess you could use the word, and it has a 12% volatility, which would suggest that the reaction to it is going to be a little bit greater. And therefore, if we get this thing to come in and we start coming flying down because of the CPI, then I'm going to be looking for it to come down. And again, what did we learn? And it's all via Elliott and his original with using Fibonacci. When you have an irregular B wave, whether it's 1.236 or 1.382, the Fibonacci relationship for the C wave suggests that 1.618 is going to be the point that the C wave will come down to. If we're just looking for 100%, that's 64.74. Well, we need to get below wave A, which is 64.52. So 22-point failure? Not seen one in a long time quite that big. But I have to tell you and share with you, what do we do when we start to see Elliott perform and many of the things adhere, the longer term patterns adhere to it, but our intraday moves are continually shifting the guidelines and the rules. Now, they're not, there are two that basically on the rule list that there are actually three that I hold really near and dear. The first one is about the wave two, that it cannot exceed the starting point of wave one. Boom. And if it does, then it's not correcting wave one. Wave two is not correcting wave one if it comes down and creates a new low. Now, that does not prevent it from going up and creating a new high above it in the B wave, just like a wave four could. All right, so enough said there. Second thing, wave four cannot overlap wave one because it's to correct wave three. And if we overlap wave one, oh, then we're not correcting wave three anymore. Same kind of deal. So even though here it's not, but it overlaps wave one and it shouldn't. That's the rule. The third one that is a no-break rule for me is that wave three cannot be the shortest wave out of waves 1, 3, and 5. That one is don't break it. And when we do, your account's going to get in trouble. So those are the three that I hold near and dear. A lot of the guidelines are exactly that. They're guidelines. A lot of what he discussed within that triangle pattern are really guidelines and not rules. And if we follow the guidelines and we check them off, then the pattern falls into place. And what we got coming out of it was that the next wave up and out will begin by thrusting out of the triangle. Well, it did pretty good. Came right back into it and then thrusted back out of it. And now let's see what happens. Now, again, I need to keep this all in the context of a finishing minute fifth wave of a very long-term bull phase within this bull market. This particular one, this particular wave, this intermediate fifth wave, started in October of 2022. The primary fifth wave, which we're also getting close to finishing, kicked in, and I believe it was going to be March of 2009. The entire cycle third wave began in, I think it was 1949, but I think it was April of 1949. This has been a long-term bull run. So does it really does it mean that we should see all this weirdness? No, not necessarily. But it's a topping process. And it's a topping process now that really has been in play, in my view, hardcore in play since April of this year. And so it is subjected to all of the muses and the sayings and the things and the changing of mind and the changing of that are coming out of the current administration. What can we apply that's going to hold? Not a whole lot, but we still have our guidelines. We still have our rules. We're seeing them getting bent, stretched, and challenged. But I'm going to stay with Elliott because that's what has been beneficial for me over my trading career. And yes, folks, I do trade Elliott. I create positions accordingly to what I think the Elliott count is and what's going to be happening. And I always have. Okay, so coming into today, got the exact response that we needed, but this went too deep. I would truly would have preferred that it didn't come down as deep, held sacred that first wave, maybe did a little four, and then came back up and got up to 6,600, which would have been where wave three would have been, I think it would have been 1.618. And I believe the number was 6607, 6608. We also would have gotten into the call wall, which sat at 6,600 SPX 6607 in the ES. And I think, what a place. Goes up there, gives it a test, fails, and then we come back down in a little bit larger fourth wave. Not happening. So we go to the alternate. Has always been. I've repeated myself now. This is the third day, except now I think it is actually coming through. But I have to tell you, while I might be disappointed, I don't think I'm going to be surprised if we come in, or even later today when I check back in with the market, that we're not back above 66, 60, 65, 65. That would be like, okay, now, what now, market? And then what's going to really have to happen, I'm going to have to allow that 1 point. And this has to be a one. And trust me, these are not typically beautifully formed wave one. The wave two, yep, ABC, can see it cleanly. This is not as clean as it should be, but it's going to be a five. So will I allow for that? If it comes and cruises right above 60, 65, 65 and starts heading to 6,600, yeah, I will. And I can do one more thing. I can come down and what's my line chart? Look at that. Not even close. So it depends on what we use. And this is the third or the last or whatever component that I wanted to bring to our attention. When we put it on a closing basis, doesn't even come close. So it could be one, two, three, four, and we go. That's how I'm going to do it. But because I use bar charts, even if you use candles, it came down and crossed. So the only way I'm going to be able to do it is to put it on a line chart. And a lot of us don't trade that way. A lot of us have to include, or we do include, the extremes, the spikes that the market will do, and then immediately retrace back from. So now I'm going to tell you, this is how I'm going to leave it. Now, the fibs that go along with the market coming back down, yes, we're going to have some support in here, but 100%, where C needs to at least be 100%, and that's 64.74. And actually, it needs to put in a new low below wave A, and that would be 1.618 at 64.17. Now, here we are. what cannot, what can wave two not do? Exceed the starting point of wave A. And that's at 63. Let's get that right. 60, well, it says 63.95. That's just not making a lot of sense to me. Oh, 63.71. Sorry. So it cannot exceed that low. And if it follows suit and comes down, it should not. If it does, well, I'm going to have to sit here and figure it out yet again. And deal with a whole bunch of stuff in terms of is this an elongated triangle, et cetera, et cetera. It's going to get weird. But again, this is a topping process. And for most of us, I mean, I'm senior, folks. I'm 71. And so I've been trading since 1979. But this whole move, in terms of the cycle third wave, began in 1949, way before I joined the Earth. So again, we are in a topping process of a bull run that's been in place and been working on itself for 76 years. It's a long time. So again, I realize that it's hard. I realize that it's confusing. And even when you're trying to trade it, can be even more confusing or challenging. Again, which is why I basically say I'm a day trader. That's what I've become. Do I still trade options? Yes. Do I still have other long-term positions? Yes. But in terms of trading the equities, trading the futures market, I'm a day trader. And on days like today, you might get those extended moves in which you can go sit and just collect a larger amount. But truly, you become more of a scalper. There are different styles to trade. So one more time, I want to say, I have the Logical Signals Trade Room reopened. I'm offering a special price to come in and join us for your first month. Also, should you desire to have a 6 month 6 month subscription, I'm basically you're going to get six and you're only going to pay for five. And I would consider those that really want a 6 month subscription. The reason why I would limit to 15 is because I would consider those the founders, the grounds for this whole trade room. So they're going to be the support in the trade room because it allows it to just function and that the money will be there. So again, trade room is open. If you are a day trader, if you're thinking maybe you should be a day trader, or if you're a swing trader, give us a try and see if it doesn't work for you. So again, www.logicalsignals.com/trade room. You'll get all the details, plus where you can actually sign up. All right, so here's the deal. If it switches and goes flying up above 65.65 and keeps going, then yes, I'm going to put this and allow it, and it's going to be 1, 2, 3, 4. We're going up in a 5 to complete the third wave. This would be 1, this would be 2, we're going up into 3. Up here would be 1.618. Perfect for wave 3. Then we can do another fourth wave. If we continue to come down, then I'm looking for these levels down here, and I'm looking for 5 waves down. Of anything, 1, 2. Okay? Now, moving averages. Well, the hourly is actually okay. We got the 8 sitting right on top of the 20, which is kind of going flat along with the 50 and the 200, actually. A little bit going flat here. They're registering this. If it continues to go down, the 8 will cross the 30, Excuse me, the 8 will cross the 20 and the 20 will head lower and cross the 50 eventually if it gets down further. And on the daily, I don't think it's registering too much of anything. Nope, still in alignment to go up. It's going to keep interesting here, folks. It is going to keep interesting. All right, so spot gamma levels will be updated. Our gamma levels will be updated tomorrow morning in the morning update. And for now, that is going to be it. And again, next update tomorrow morning.